Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Hey everyone, we have launched the BODC Multifamily Impact Fund. Invest with a trusted operator with a track record of success. Our fund offers diversification, risk mitigation, tax benefits, and stringent acquisition criteria. If you'd like to learn more, head over to our website at breakofdaycapital.com.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, I'm going to discuss bullish or bearish. And when talking to investors the last year or so, and probably more the last few months, there's a lot of unknown these days causing indecision, stress, and worse. There's been some capital calls, a bunch of deals that are in trouble due to their debt service, cap rates expiring, and other deals where the loan is coming due and they can't refinance because the leverage they put on the deal a couple of years ago is no longer available. So in order to get a new loan, they'd have to infuse the property with a lot of cash, and cash they probably don't have. But truth be told, this is not most of the deals out there. It could be most for some investors based on who they've invested with. But I definitely don't want to sugarcoat it and say, look the other way and be overly optimistic. But there are many real estate properties thriving out there. I've been doing a ton of traveling the past month for different conferences and groups I'm involved in. I spoke at MFIN in New York City on the multifamily panel where we discussed what is going on in the market. There's obviously a lot of conflicting data, scared investors, clickbait media, and there are definitely some unknowns causing price discovery. A gap between what the buyer is willing to pay and what the seller is willing to accept. This is nothing new over the last 12 months. I was asked what my deal flow looks like, and it's slow. The price discovery, like I said, due to the interest rates, is causing a lack of deal flow. And once people know where the rates when the rates have stabilized and starting to head down, you'll see transaction flow really pick up. And I think that starts to happen at the end of Q1 and pick up steam as 2024 progresses. So then the question becomes, when is the bottom of the market? People are assuming we're still a bit of ways from that. And I think that we're basically here at the bottom. You'll just see more transactions happening, but I think that price that we're seeing now, that 20-25% discount, isn't going to get much lower. And you saw the stock market the last 2 weeks really pick up of late because people think interest rates have finally stabilized. And you could see capital flowing into the markets. And there's a ton of dry powder sitting on the sideline. And once the Fed really signals no more interest rate hikes, you can bet money will flow back in and investing is really going to pick up. At the conferences, we also talked about what our investment strategy has changed in the past 6 months. And we're still looking for good deals that meet our criteria. We submit offers on deals, and if the seller agrees on our price, then we can work on a deal. And if not, then we just keep underwriting and acquiring data that will help us make better decisions for the future. Another question I get asked on these panels is what are our plans for the upcoming year? And we see opportunity now and in the upcoming year. You're supposed to invest where you think things are going to be, not where they are now. And that's why we see a lot of opportunity. I see a ton of people waiting on the sidelines, waiting for the perfect time, and you can never time the market perfectly. There's always opportunity based on the deals you find, how you underwrite, and your ability to execute. Another panel I spoke on was a value add panel in Phoenix at IMN for the middle market multifamily conference, and the sentiment seems to be the same: cautiously optimistic. Invest in hard assets like multifamily. It's a great inflation hedge. Housing is a necessity, and there's a lack of it, particularly for workforce housing, as they don't build more of it. They only build Class A new apartment buildings. I see investors squirreling their money away in high yield savings. My thought process is, why make 4.5%, maybe 5%, when you could make 15% plus get tax benefits and a hedge against inflation? I understand it's safe, but to me, you're giving away a lot of money. I prefer my money to work a lot harder for me. Anyway, these are just my opinions. I hope you got some good nuggets from the show. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.